So when I look at opportunity in the multifamily market, I'm looking for where we're likely to get the best rent growth that will, of course, filter down to NOIs. And in that respect, then I believe Class A minus, Class B across America have the best opportunities. Class C too, but I prefer Class A minus and B for long term. And the reason is that we've had tremendous building activity over the last couple of years, so we see a little softness at the high end of the market. But the Class A minus and B doesn't compete with that. We do twice a year a cap rate survey. And I didn't talk about this part of the panel, but part of the cap rate survey, we ask our professionals, it's a survey of our professionals at CBRE, we ask, where do you see cap rates going? And what was very interesting when they gave that 6-month perspective or that 6-month forecast is about half of the responses were for stable cap rates. The other half were slight increases. And I totally concur with that, that we will see some markets stay the same, but some rise. Now, where it gets more interesting is that the feeling is that value-add properties, that we believe cap rates will stay closer to where they are right now because of all the capital, all the interest in value-add. But the higher end, we're going to see a little bit of widening of cap rates, maybe 25 basis points over the next 6 months. Oh, there's so many things to think about. You know, we of course think about the economy every day, and we're trying to figure out what the new administration will mean for that. Certainly one of the aspects of that is we are looking at interest rates. We do expect interest rates to go up. We're likely to see the Fed tweak the federal funds rate about 3 times, and that means that the 10-year will likely rise. But accompanying that, we should see stronger economic growth. Now, what that means for the apartment market is that that should be good for demand. So even though we're building more units than we have demand right now, and that will, even with stronger demand, will still oversupply a bit. It's not a very dramatic imbalance, and so a stronger economy should be good for the apartment market. And the oversupply situation, because we're pulling back on starts, we expect 2018 to start seeing a better supply-demand balance. So we feel good about 2017, certainly slower. We're projecting 2% rent growth. Next year, or 2018, will be higher.